Hello, folks. This is Brandon Chatmuth today. We're talking about with TheoTrade. We're going to be talking about today how traders got it wrong about the Iran-Israel conflict, and we had a big setup last Tuesday. I talked about it here at TheoTrade for our members. We saw a number of significant prints in the option market, really pointing to a specific outcome based on an escalation in the Israel-Iran conflict, and we saw something completely different unfold and even more happen than we probably thought possible. So we're going to unpack that. We're going to talk about where they got it right, where they got it wrong, and what's next in this. So, for example, the S&P today, it looks like we finished close to 1% higher right now. Very unusual. I mean, look, if you were following what happened over the weekend, bunker busters, retaliation. They're hitting our sites in the Persian Gulf, but apparently it may have been forewarned that they're going to do something and the locations they're going to hit, because off of that news, the market rallied pretty significantly. And who would have thought the market would be 1% higher after all that unfolded over the course of the last week? If we go back to last Tuesday, you said, hey, look, we're potentially there. Iran might close the Strait of Hormuz. We're going to see the U.S. enter the fray and bomb or do bunker buster bombs on Iran sites. And we're seeing some retaliatory start measures and a close of the Strait of Hormuz. All this stuff taking place, you would have thought that we would have a much different outlook different outcome than we're experiencing right now at the moment. So I'm going to show you what happened last Tuesday. And to me, this looked like a pretty dang good setup for what was about to unfold in the Middle East at that point in time. This is 6/17. So I have a program called Ghost Prints. So every day I go in and I do scans and I find activity in the options market, among other things, and I post it here in an activity log. We're actually coming up with our own scanner that's supposed to launch July 1. And tomorrow at 3 o'clock Eastern, I'm doing a masterclass walking through the basic components of Ghost Prints, and we're going to talk about how to do this type of stuff. But I curate stuff. I have a philosophy. I try to get 10 prints a day, try to find 2 to 3 trading opportunities, and look for about 2 to 3 trades every week. It means you're walking away from stuff, right? Well, we did walk away from going long energy because we'd already closed a trade a couple days prior to this in XLE. So why go back in when it's extended? But notice here, Exxon, XOP, CVX, Devon, COP, APA, all of these are energy stocks. Then we had a big trade in IEF, which is the bond, U.S. Treasury bond, 7 to 10 years. UP, we're long dollars. This seemed like a pretty rational trade if there was escalation, right? Higher oil prices, higher energy shares, maybe defensive rotation, bearish U.S. markets, foreign markets even more so, and we'd see a stronger dollar as a result. Well, what actually happened? Well, if we go back here, the S&P saw a little bit of push lower, and then today we're up 1% based on the aftermath. We look at UP. This is a proxy for the dollar index, predominantly the euro US dollar. It looked like we started off pretty well. We kind of faded on Friday. We gapped up higher today, and we closed the door. When did it close the door? Again, we'll look intraday here again, right? We kind of started to see a little decline off the bat. We rallied right about 10:30. We sold off. We took another level lower. SPX, right? Same scenario, right? Around this time, 10:30, we started to go higher. What about bonds? What about IEF? Right about 10:30, we started to go lower. Okay, we backed this out again. It was higher for the day. We faded from our high after that 10:30 or 12:30 Eastern time as we got news from the retaliatory strikes from Iran. Then we go to what? UP, right? So UP, again, reversal intraday, 1 day, 1 minute. You'll see again this leg right here begin at 10:39 my time. So all of this came together after what we saw overnight. Maybe the bunker buster bombs were successful. Everyone's kind of questioning to what degree it's successful and what the retaliatory strike's going to be. There was discussion from Russia. Are they going to supply them nukes? Whatever, right? All this stuff going on, and what we saw today is that in essence the market said it's over. Is it true? I don't know. But if you look at forward/CL, all of that bullish news over the weekend from again us bombing their facilities, the Strait of Hormuz being closed, which is 20 million barrels a day, by the way. Oil prices gap up to around 17 and shut the door and closed down to 67.50. Now, during my session, I actually dug into CL and showed how the shifting term structure of oil futures and how we actually softened a bit today. And we may be going back to where we were last May, which was much more of a bearish outlook, or starting to see more of a bearish development in the product depth of oil. So if you don't know what these lines are, I went over it today. Subscribe to TheoTrade. We'll go through it with you. And I just talked about those today. Cyclical's top on the list. Real estate's up there. Bond yields are going down. Price is higher. Utilities doing well. Technology kind of middle of the pack there. Gold, though, slipped. It was second best performer. We fell back here just a little bit. Okay. I like gold getting back and retesting prior highs. We're looking for that as part of Ghost Prints. But I'll tell you, I mean, look, this is a very interesting development. They essentially got it right, but at the same time, their trades got it wrong because everything escalated so fast that all of a sudden we're basically saying it's over. Now, what does that mean? What is that next leg for the market right now? Well, you look at SPY, for example, there were two significant prints last Friday at 594.92 and 598.64. Today, we just broke through that upper print level. That's going to act as support. We break this down intraday, for example. You see it in testing right here, boom, 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 and we finally break through. We test as the floor of support down that lower print, and two prints down here. Again, what it's signaling is right now is that level now becomes support for the market. Are you ready to get long? I mean, it wasn't 2 weeks ago. I'm looking at a 5 to 10% correction based on a signal that we got on June 6th. I'm still expecting that, by the way, but it doesn't mean we can't retest 605 on the SPY, for example, right? You look at SPX, for example, doesn't mean that we can't retest 60.50 and maybe even go a stretch higher. We may have the capability of doing that, right? We might see a little bit of trade positively as bonds prices ease higher and yields go lower, may help financials as those kind of came off the depths today and rallied towards the high of the session. Certainly rising bond prices, falling yields helps utilities, helps real estate. But guess what? If oil prices continue to drop, it helps another area. We're going to look at today's trade, Jets. Now, Jets, we're seeing that we kind of tested a floor of support today, tried to break out to the downside and rallied off it. Huge volume today on this reversal, right? We zoom in on a 1 day, 1 minute, that exact moment when everything began to turn, Jets proceeded to rally by $1 or 5% off of the lows of the session. It's a big deal. And a lot of the volume occurred right there as we began to accelerate to the upside. So what does this mean for Jets, right? Could we retest the prior high at 23.25? Could we stretch to 24? Well, if we look at today's trade in Jets, we look here at an 11 July expiration, 4,000 contracts mostly bought as a sweep. That just means they bought smaller increments and just sent off the trade at the exact same time across multiple exchanges. So most of that 4,000 volume occurred in really just one trade that was sent off across multiple exchanges called a sweep. Buying those calls, trading for maybe a cent or two below the ask price, indicating these are buy transactions at 23. It gives us a target, a time frame. That's 18 days to get to 23. And if we start to see us push through 23, it may create additional gamma pressure, gamma squeeze, and may drive the price higher. Some components in Jet, they have pretty high short interest. You may see a short squeeze in stocks like JetBlue, for example, right? That has higher short interest. Could this rally to 5 again? We took a bullish trade back here in Ghost Prints profitably in JetBlue. Are we back to that same level? Could we see a rally? In this case, we decided to take a diversified approach in Jets. And right now, Jets has higher volatility that may come off as the price rallies. And if you bought a 22 call and sold a 24, it would benefit that trade as the price gets up here north of 23 by expiration and help push us towards our 70% gain we're looking for in that sort of spread using the 18 July expiration. So the point is look, yeah, institutions, they got it wrong last week. They got the escalation right, but ultimately the escalation happened so quickly that the fire blew out. And at least that's what we're pricing in today. And again, makes sense that if oil prices continue to pull back, that we could see a rally in jets and a rally in the market generally, at least in the short term. And I'm looking for the VIX to try to push lower, back towards lows again, towards 16, and may create an opportunity to once again get bearish to the downside. And if we look at today, the S&P did beat gold, but initially underperformed. And I'm expecting gold probably through this process to inch its way back up the list here a little bit in terms of weekly performance as we edge towards that next high. And we'll see if that occurs towards next Monday's video. Folks, have a great one. Catch you back next week. Thank you.